But euro US dollar, I mean, this thing sold off a cliff on the open. My goodness. Big gap down and a lot of gaps all over the place. The question will be, is this market going to fill some gaps here and then continue lower? What's going to happen here, right? I actually think that, you've had this huge sell-off. I wouldn't be surprised if there's a little bit of a gap fill to start out the week. But then we'll see. We'll see where things go. Euro dollar still looks very weak to me. It's not just the tariff stuff. In fact, you can see the Edge Finder is not accounting for tariffs per se. The Edge Finder is accounting for a lot of stuff, but it's not reading headlines. In fact, the score here is based off of commitment of traders data, institutional money, which is favoring the downside here for euro dollar. It's technical based, right? So it's looking at seasonality. It's looking at momentum in this market or the trend. It's looking at PMIs. It's looking at unemployment rate, and it's looking at interest rate differentials. And most of our calculations, most of the algorithm is pointing towards euro dollar bearishness makes more sense at this time. I mean, just look at the technical chart and it would come to the same conclusion for me, which is this chart looks bearish. It's hard for me to get bullish on a chart like this. Had you have seen this move, then yeah, maybe euro dollar had some rise to it. But with EU tariffs also being pressured by Trump as well, that may be the next round of things. This market is skittish for a good reason. It's wondering, hey, what's next for this? So I like the euro US dollar bearish call on the Edge Finder. That's been a wonderful reading in the last few months, and I'm going to look to kind of find opportunities on that. I've got two setups on the euro dollar, either a return and retest of this trend line and looking for key levels of resistance, rejection intraday, something like that. If I can get that set up, I like that a lot. The other would be a break through those lows and a retest of this area that we are currently trading. So I like euro dollar to the downside, looking for opportunities to continue to sell this pair. I mean, if I'm watching any currency trades right now, it would be euro dollar to the downside. Personally, I did close another profitable trade on dollar Swiss. I actually closed this real close to when the open happened, just because, again, when it comes to like huge headline pops, I don't love to like take the gamble of whether or not it's going to fade or continue. Like when you get this big, like, oh my gosh, tariffs are going to ruin the world. And, maybe they will, maybe they won't, right? Nobody knows for sure. It's not as easy as tariffs bad, tariffs good. That is a really, really elementary way to look at tariffs. We discussed them earlier. Tariffs are simply a tool. Targeted tariffs, I would say, targeted and slow tariffs are probably more effective in my personal opinion rather than aggressive all at once tariffs. But tariffs themselves can be a great way to bring business back to a country as long as they don't respond or they don't turn into massive trade wars. So that's where the market's kind of struggling with that here today. What are your thoughts on all this? Are tariffs the end of the world?
112. Yes, it is. Done with America. It's fun. It's fun. Made some profits today, so it's fun.
Well, what were you trading?
The dollar Swiss you just bashed, but because I took profit on the peak, not peak. Because I was like, hey, I don't know if this is gonna go higher anymore. So I'm like, I'm out of there. So I was supposed to go to 92 something, and then I stopped because it's too quick, too fast. I don't like it.
Okay, yeah, fair enough. I didn't know we were
likes it.
I also I was long dollar Swiss. I took profits, like I said, just a minute ago, just near the open of this week. So, Ivan, tariffs are obviously the topic of the day. They're at this point, everything is politicized. Everything is so controversial. But what are your thoughts on tariffs?
Horrible. Oh, sorry. Fantastic. Neither of it's fun, quote unquote. It gives us volatility, gives us something to work about, gives us some to use our brain, but it's not fun because it creates volatility, it stops you out. So my thoughts is good for America because it's going to lead to dollar strength. It's going to give us one direction at some point. So I like that. I like a direction. We have something to work on, not just range bounds. But yeah.
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Yeah, they certainly do. I mean, if you take a look at the dollar index, you've just got this spike, this continuation here, as people try and figure out what they mean next. I mean, tariffs. I said this a moment ago, but I'll kind of reiterate it for people who may have just joined. Tariffs themselves are not necessarily good or bad. They're just an economic tool. They can be good. They can also be bad. So I think that what the market doesn't like here, why we're seeing, NAS and S&P 500 down on the day, you're seeing sell-offs in Bitcoin and things like that, is the kind of quickliness, I guess. That's not really a word, but the speed, right? The all of a suddenness, if you will, that tariffs were put onto many places pretty aggressively, because, the effects of tariffs are immediate, right? So like when you put a tariff on a place, I know someone who is in the construction world, and right away they said like, oh, a bunch of the goods and things that we import, like we have to figure what we're going to do out, because a lot of the profit margins of businesses can very quickly get impacted, and that can lead to layoffs. So there's ways to use tariffs to your advantage, because again, what's also not great for the U.S. is just having massive trade deficits where we're just the net loser at a lot of stuff. So it's understandable why, maybe you want to reevaluate some stuff, renegotiate some stuff, but the all of a sudden tariffs may be what is freaking out the market today. Do you think, is this another 2018 scenario where in 2018 you saw the S&P 500 as an example down at 20% in a few months? Do you think it repeats?
Yeah. No, wait. China was given back in 2018. Was it about $200 billion worth of goods, and then $300 billion worth of goods? Now we have Canada, Mexico was also part of the last one. China, South Africa, maybe Brazil, European Union about to come in. So I feel like he's bothering more people this time. It's going to be a bigger impact, and also targeting all their biggest trading partners. So is this 2018 again? Yeah, I would definitely believe so.
Yeah, I mean, it definitely has the potential, especially with what we know about 2018 was, and by the way, guys, for those of you who are maybe less familiar on your economics history, 2018, as Ivan was just explaining, we saw large tariffs kind of aggressively imposed by the same president, right? This is his part two. Now, again, I do want to just clarify, this is not a this is not a political channel at all. In fact, overall, during Trump's last presidency, the market actually had a very, very strong gain. But during a specific period of time, which I think is what we're focusing on here, where tariff wars really took place, trade wars with China really took place, we did see a very corrective period as the market grappled with, tried to say, hey, what do we do here? We've got, tariffs coming in, China's retaliating, right? That's the thing with tariffs is, if tariffs existed where the US could just place tariffs and we knew that other countries weren't going to place them back on us, they would just be an easy go, right? But nobody, other countries are not stupid. They also are like, oh, well, if you're changing the trade dynamic, we too will change the trade dynamic. So, we saw that in 2018. It caused a very large market correction in a very short period of time. To give you some numbers here, you're looking at one point down 21% on the S&P 500, probably more on the NASDAQ in 83 days. So that was almost a 3-month period. And we saw this market completely change in a very quick time. I mean, look at before that, you had just this upcycle for stocks under Trump. So, I mean, this was just a massive run. And then the trade war drama. So it seemed like Trump came out of the gate this time swinging on the trade war drama stuff. So we'll have to see where that shapes up. So, Ivan, what do you think about this? Do you think it's a prudent thing to say, maybe stay on the sidelines on indices and cryptos and stuff, and maybe focus elsewhere?
You mentioned crypto. Do you
yeah,
remember
I know you're fully invested in Dogecoin, you told me.
Yeah. Do you remember 2018? It was bonkers. It was crazy. It was amazing. I think we went from, what was it? We went like well, I have to find it. I think we dropped like 70% or something in BTC in 2018. So a fantastic idea to be long. Yeah, what was it? 71% in 2022. That's 22, so 2018. It's not necessarily the greatest thing from 20,000 or so. Sorry, 15.
Yep.
8,000 to about 4,000 something. Is not necessarily a very great idea. So yeah, I don't like it. But okay. Point being, I'm not staying long Bitcoin at the moment. And I have said previously in a meeting earlier that this is a time to, maybe a couple of months even before you find the bottom. Because what took last time. But then it's go time again. And I believe we might be an all-time high at the stock market, given that he is going to continue with these shenanigans, because it is ultimately going to hurt businesses, because he wants, or the idea is to bring US businesses that has gone abroad to a lower cost country to come back and create factories and productions in America. But you can't make avocados in America, at least not the scale you needed. So
Yeah.
there's that.
So it sounds. So correct me if you're wrong, if I'm wrong, Ivan. But it sounds like you are a little bit more cautious with the tariff stuff. That you're thinking that this could cause perhaps a couple months of risk assets being challenged. Maybe seeing some downside on things like Bitcoin and stocks, and maybe the focus is stay bullish dollar. I mean, that I think that's a pretty rational overall conclusion. Is that kind of your stance overall?
Yeah, that's what we have learned from before. But what I've also learned from before is Trump can change by next Monday.
Yes.
I can't remember exactly the country, but he had like a trade war shenanigan thing overnight in 2025. I don't know if it was Argentina, Brazil, or Uruguay or Paraguay, or whatever it was. But there was a country that didn't allow or didn't want to accept the immigrants he was sending on a military airplane.
Colombia.
And then they were doing overnight, and then by the next morning everything was all resolved. So I want us to have an idea, generally speaking, not trading advice whatsoever, to look for and expect longer downturns, for that to be the value you're looking for, rather than trying to chase the highest high that we have ever, and be okay, where is the best opportunity, where am I going to wait? And if we make higher highs, if we go up to 6,200, okay, cool, great.
Yeah.
But that might not be the most likely scenario at the moment.
Let me ask you this too, Ivan. There's a chart that we have not yet covered in today's show that I know, and a lot of people are looking at. Gold is trading at a fresh all-time high. You've got 28.27 on the spot price of gold against the US dollar. And it is not coincidental that this is happening on a day where people are scared. There's fear in this market. You could feel it. I saw a lot of my favorite content creators even issuing caution. My friend Kathy Lean, I'm not sure if you know Kathy, but she's very, very smart. Yeah, very, very smart macro trader. She's very, very smart. And she issued just a word of caution. And this is not somebody who's like a perma bear. I always look at, just a heads up to everyone. Everybody knows that everybody has like a kind of perspective on markets. Like some people are more optimistic and bullish, and some people are more cautious and more risk adverse. And everybody has their flavor, if you will, on the content creator space as well. Well, Kathy, I would say she's pretty unbiased. She's pretty, mixed, but she's very smart. If you guys haven't checked out Kathy, I would encourage you to do so. But she sounded pretty nervous about this, and she pointed out, and this is somebody who knows a lot about the macro more than myself, and definitely issued a word of caution on risk assets, and I think that's very valid. You can see the fear coming into this, because the tariff, the thing is, whether you think tariffs long term will be a net positive or net negative, there's controversy on both sides for that. But if they are a net positive or net negative, it's kind of irrelevant to the today result. Right now, today, the effects of tariffs are felt negatively. In the future, there might be some net positives, but the point is, some people would argue short-term gain for long-term, or short-term pain for long-term gain. Other people would say short-term pain for long-term more pain. It just depends who you ask. But the point is, right now we know we have pain, and that's why gold, I think, is spiking here today. What do you think on gold? Is this would you prefer? Let me ask you this way, Ivan. Would you rather stick $100 in gold right now or $100 in S&P?
Oh.
Take your pick. Which one?
Wow. Okay. All right. I have to say, a bit of controversial take. I didn't expect gold to go higher, because if we are expecting this to create inflation, that should send the gold lower, as it didn't, or at least range bound in 2022. So my money's going to be on gold.
That's what I thought.
Interesting. My watch responded to you, Ivan. Sorry.
Hey,
Siri talked to you. Wait, so let me get this straight. So you're saying $100 in gold on the short side because you think it's going lower?
Oh no. If you have $100, it's buy side, right? Only.
Okay.
Right?
Yep.
So I would buy S&P at the moment. So you're giving me what is it? Pest or cholera? What do you call it in English? Like,
I'm giving you a challenge, a quiz.
Yeah. It's a challenge. That's a challenge, because if I believe we're going to do 10% lower on S&P, and gold is now 2008, and I think we might go to 3,000 with these shenanigans, then it just depends on how long you want me to hold that $100 in gold.
Yeah, let's say 30 days. You have to put $100 in S&P long or gold long 30 days. You're thinking more gold.
Yeah, I think so.
Okay. Yeah, no, that's fair. I guess I'll answer it as well. I think if I could choose S&P 500 30 days out or gold 30 days out, I have to stick to my system and say S&P. But from an emotional short-term perspective, it would not be an easy trade, right? Like, you look at S&P, these things have room to pull back. On the S&P 500, if I pull up this chart, if we could show that on my screen for a second, guys, check this out. So you've got S&P 500 traded briefly across the all-time highs, closed there, looked great. I was super thrilled. I was like, yes, we've got the all-time high breakout. And then we quickly rehashed out our bearishness here with the DeepSeek sell-off, right? And now we regained, and again, I think that this market is really throwing people into a headspin, and understandably so. I just want to say to everybody who's listening, if you have felt confused by the market in the last week, you are not alone. This is a very choppy back and forth market as people are trying to figure out, is Trump going to be more tariff focused and kind of break down a lot of the systematic stuff in our world, in the US, or is it going to be more focused on pro-business and growth and all that? And it seems like, maybe in the long term, maybe he is going to be more focused on, second half of his candidacy going absolutely bonkers on ripping the economy higher. But in the short run, there's some headwinds here. And I think the market is always kind of short-term focused.
Tad stronger.
Okay. 50.9. All right. So ISM's manufacturing PMIs came in better than expected. And let's see the market's reaction. You got stocks not moving too much, slightly lower, I suppose. Then you've got gold slightly lower, dollar index taking the reins once more. Maybe going to actually hold this gap open spot, right? So many times when you get this big gap, the question is the market going to fill that gap or hold that gap level as support? So far, it looks like gap open is being held by the buyers here. We'll see if that persists. Oil lower as well. Ivan, I want to ask you maybe the hardest question of the day so far. PMIs come in better than expected. Right now, is this good or bad news for stocks? Like, is strong economic data, are we back to a point where strong economic data would suggest more inflation, so it's bad news?
Good news is bad news. Well, you got manufacturing PMI above 50, back into explanatory area, and Yeah, I think it's good. Good for the economy, but bad for the stock market, and good for the dollar.
Sure. And I think there's been an uptick here in manufacturing PMIs in recent months. A lot of people contributing that to the kind of pro-domestic onshoring stuff that Trump seems very adamant about doing. So that is, that I think that's why we've had 2 back-to-back strong manufacturing PMIs. This has been in contraction for some time. There's hopefulness that the tariffs will make U.S. manufacturing more competitive. That's an area that, again, with tariffs, there's winners and losers across the economy. So perhaps this is why there's a little bit of an uptick in this particular part where they say, hey, look, manufacturing might be a little bit more effective. That being said, for the stock side of things, higher productivity in an environment where now tariffs are under scrutiny because maybe they're going to be inflationary. Then you have an economy that is also heating up that could also be inflationary. And then, one thing to throw in there, Ivan, that we can't discount is there's not a clear resolution with Ukraine and Russia yet. And so that also keeps oil prices higher, which keeps inflation still kind of as an issue.
Actually, today's just fine. So is it a surprise? Nope, because we were kind of bracing for this on Friday last week. If you were with me for my afternoon session on Friday when tariffs started to hit, that's when the headlines were affirming that it's going to be February 2nd or February 1st over the weekend. And the market had a huge sell-off on Friday. I said, beware of the potential gap on Sunday night for futures market. And that's exactly what happened. I posted this in my Telegram last night. First thing I did is check my phone around. This is 6:17 p.m. Eastern time. You can see that futures are down. So there's S&P futures, there's NASDAQ futures, and down last night with a pretty healthy drop, and that's what we got this morning. So futures market was down and stayed down. Let me go into my futures trading right here. There we go. So there's your big gap from Friday to Sunday night. We're pretty much around the same price. And same thing here on NASDAQ futures. So gap lower, we're around the same level. So we haven't, what's interesting is we haven't made fresh lows from the night. So we gapped lower, kind of poked those levels. You got to wonder if this is going to be something that the market can kind of hang out here with just a gap day and just kind of this own chop fest with the market like caught on its heels. We're down about 1.9%. Do we contain, right? NASDAQ is down. There we go. This should be closing out for profit here. Booyah. SPX for 260 for the win. Perfect. So anybody that's in my daily profit play, that's all I needed to see. And there you go. So nice little winner there. And I've got one other trade running. So 335 trading at 330. Going to hang on to that one for a second. Okay, the other one needs more time. So that should be good. I posted two new trades in Pulver Alerts this morning. I did a SPY trade and a QQQ trade. I like those quite a bit, actually. We do have higher volatility, which I'm totally fine with. Let's figure out how. Actually, I think I can get this trade posted this morning. Let me see. Yes. All right. Look at this trade right now. I'm going to go SPY. SPY. I don't have any expirations right now going into April. So the next one, I mean, these are going to get filled in eventually, but right now I've got an April 17, which is out 73 days. I'm going to look at a trade. Son of a biscuit. So I got to go 5 wide on the SPY. I may not be able to take this trade the way I want to, which is okay. All right, easy does it there, Price. Price is making a screaming comeback right now. Okay, we'll see if things just chill out for a second. I have one trade in here. SPX. All right, so I'm down about 60 bucks on that one. I just need price to calmly settle the heck down. Give me another 50 cents profit, hopefully. Keep an eye on that one. But I'm going to look at a trade out to April. I think the only issue is my spreads are not awesome. But let's see if I can figure it out. So if I go out to April, So the trades I posted in Pulver Alerts, right here under the index column. So I did QQQ and I did SPY. So on days like this, we have higher volatility. That's one of my favorite trades to go to. So I posted that. It does require some capital, so I would recommend if you're going to take that trade, you want to have a margin account. You want to have some cash available. If you don't have that, then don't take the trade. Okay, what the fudge, dude? What is up with this? We just had a $5 rip in the last 4 minutes of trading. Is there some breaking news that I'm not getting? Let's check out. There you go. Well, just like Colombia, Mexico's president is tariffs delayed for a month. Is that Mexico or is that U.S.? Looks like U.S. unveiled it. Mexico's retaliation is going to be for a month. Just freaking volatility, man. Crazy stuff. And then the market's like, hooray, we're not getting smoked by 2%. Market was down 1.94%. I still don't know if we're going to fill the gap today. That's a pretty healthy move. We'd have a 1+% gap. I mean, it's difficult for the markets to fill those gaps, but you know, one little manipulation candle higher, and then the market fades and just kind of chops around. That's all I need for a little trade this morning on SPX. Let me catch some comments here. Okay, so I want to take a look at April since I don't have any expirations out to April. I don't love the strikes right now. Let me go to the, it might be easier to go to SPX, honestly. If I go weekly, as long as I keep these 5 wide, this could be a pretty good probability of profit. The issue is I'd have to create a wide spread. So let me just take a look at this one really quickly. If I do, looking at like the 20 delta, so 25 by 20, and then could I find a wider spread? So I go 5 wide on the debit spread, and then let me see if I can go maybe 20 wide and get a credit. 5,300. So if I sell that, buy that, so that's 50 cents credit. That's not a bad trade. These strikes are way off though. Okay, so I can go 30 wide. High enough probability to profit, 52.90. Shoot, I might not get, I mean, if I get filled for $1, that's okay. I get a profit trap on here, $5. But man, the bid mid ask is all over the place. All over the place. Okay, let's check SPX prices really quickly. 59. Where the heck's my strike? I think I did like a 60. 59.90. Son of a biscuit. So my, darn it. Well, 335 needs to be 670. I think I might take a small loss on this one here. That is annoying. Okay, I'm going to close this one down for a small loss. 6 dot. So you got it here for $6. All right, it's got filled for $6. That's fine. Okay, let me see if I can get this trade in. So let me go SPX out to April. Okay, let's go SPX to April. Sorry, get back to this trade here. April. I thought I had the trades entered in. If not, I'll start from scratch. There we go. April 17th. All right, guess I got to start this whole thing over. So the positive thing is Qs are in, SPYs are in. I'm looking to get a trade for income. I'm going to look at SPX. April 17th, it's out 73 days. So a 25 by 20, which is a debit spread. And I'll move this way down here to like a 10 delta. See if I can turn this into income. So again, I like I said, the bid mid ask is pretty wide on this trade going out to April for right now, but I want to look and see what the percentages are. So if I sell the 5290 or 5300, maybe the spread's a little bit tighter, and then go, that's 20 wide. That's not a bad trade there. So max loss, profit trap, buying power is pretty tight. I don't mind that trade at all. Go a little bit wider. All right, let's see where 5300 is on the SPX. So 5300 is clearly way the heck down here. We'd have to have a pretty nasty spill. We'd have to drop another 11% on the SPX for this trade to be threatened and take any risk. So I'm going to try to take this trade hopefully for $1. a dollar.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.